Hello and welcome to today's webinar with My Solo 401k Financial. Thank you so much for taking the time to join. We're going to get started momentarily. Okay, fantastic. So I see the viewers have joined. Again, thank you for taking the time to join. Please like this video. Please subscribe for more videos like this. Please ask questions in the chat. Today's topic is a very important topic for our 401k business financing clients, which is going over the Form 5500 process. So we're going to deep dive the topic today, and just to preview it. And I would just also mention that if you're watching on a recording, you can ask questions in the comments, and you can also click on the YouTube description. There will be the ability to jump to different chapters. So as far as what we're going to go over, we're going to talk about the baseline as far as what is a ROBS 401k, a Form 5500, including what information is reported, when it's due, talk about the valuation that's connected to the 5500 process, penalties, and the late filing process as well. So as far as setting the baseline, what is a ROBS 401k? So that refers to what the IRS calls a rollover as business startup. And that would allow someone to use retirement money to start or buy a business without having to pay taxes or penalties. So for example, you could roll over money from a former employer plan or a non-Roth IRA, and then use the funds to buy a business. Say if you want to buy a business from someone else that's not related to you, or start a brand new business. Could really be anything, any type of goods or services business. Some of the key requirements, again, is that it's got to be money that you can roll over. So it could not be money in a current employer plan, because typically you can't roll that money over until you're at least 59 and a half. It can't be money in a Roth IRA, because you can't roll money from a Roth IRA to any type of 401k, including a ROBS 401k. It has to be an active business. So what's referred to as an operating company, providing goods and or services. You've got to operate the business as a C corporation. You've got to be a bona fide employee. So typically that means you're working at least 1,000 hours a year. The steps are you would first incorporate a C corporation, and we handle that as part of our services. Then that entity, that corporation, sponsors a 401k plan. So we have an IRS approved plan that will allow you to invest in the stock of your own business and fund your own business. So an account would be set up in the name of the 401k, roll over money into that 401k, and we'll handle the transfer process as part of our services to ensure that the funds are rolled over as a non-taxable direct rollover. And then once they're in that 401k account, you would be able to invest however much you want to into the stock of the C corporation. So it's not a loan, you're buying equity in that entity. And then the company, the corporation, has the proceeds of that stock purchase, which it can use for any type of legitimate business purpose, like buying or starting a business. So at the end of the day, you'll have an entity that's sponsoring a 401k plan, and that 401k plan needs to be kept in compliance. So one of the most important annual compliance processes is filing the Form 5500. So the Form 5500 is an informational tax return. In other words, you're not paying taxes based on the information that's reported. Instead, you're providing information about the 401k plan, and it's filed with the Department of Labor. So it's consistently filing that 5500 is recognized by the regulators as one of the most important compliance requirements that applies to 401k plans. So there are actually different forms, like, you know, with many tax returns, there's different versions. For example, there's a 5500 EZ, there's a 5500 SF. So those versions don't apply to a business that's been funded by a ROBS 401k, by 401k business financing. Instead, you're going to use the long form 5500. It's filed with the Department of Labor, as opposed to the 5500 EZ, which is for solo 401k plans, which is filed with the IRS. it's filed electronically via the EFAST system, as opposed to the 5500 EZ, which is filed by paper. And so unlike the 5500 EZ, a common question that comes up because someone might have experience with the 5500 EZ. With the 5500 EZ, there's a minimum $250,000 threshold that has to be met before that 5500 EZ filing requirement applies to a solo 401k plan. With the ROBS 401k, as I mentioned, you have to file the long form, and there is no minimum plan asset value. So even if the value of your plan is less than $250,000, that 5500 filing requirement is still going to apply. And I would again encourage the viewers to ask questions in the chat, or again, if you're watching on a recording, you can ask questions in the comments, and we will get back to you generally within one business day. So now let's turn to what information is reported on that 5500. So you're going to have things such as the number of participants, the type of business. You have to enter a business code, and the codes are available in the 5500 instructions. You've got to list contributions, so money that's contributed. For example, if you're making 401k contributions, like the $19,500 that you can make for 2021, or even up to $26,000 if you're 50 or older, as well as employer contributions, matching contributions. There's also space to enter rollover amounts. So when you're first funding your business, of course, you're going to roll over money to the plan. And that rollover amount needs to be listed on the 5500. You will receive a 1099-R from the company, whoever had your former employer plan or your IRA. And so that amount that's listed on the 5500 would correspond to the amount that's rolled over, which would also correspond to what's listed on that 1099-R. If you take a distribution from the 401k, let's say you roll money out to another retirement account, or you take a taxable distribution, likewise, that would be listed on the Form 5500. You've got to list the value of the plan assets. So in the context of a ROBS 401k, that's going to include the company's stock. That's going to include other assets that are in the plan. For example, you might have some cash in that 401k account. You've got to list the beginning of the year value. So if you filed the 5500 last year, that would just carry forward. And then the end of the plan year value. And obviously, as part of our services, we are handling the Form 5500 preparation for our ROBS 401k clients. There's also space to list the value of specific assets that are in the 401k, like the company stock, which would of course apply if it's a ROBS 401k funded business. 401k participant loans. So if you ever took a loan from the 401k, you've got to list the value as of the end of the plan year. And if you have any alternative investments in the 401k. So it's important to note that here, what needs to be reported is not business assets. So if you have real estate that's in your C corporation, that asset is not listed on the 5500. But if you own other assets in the 401k, which fall under one of these categories, then that would all have to be specifically broken out and itemized on that 5500. Now, just to shed a little more light on the company stock, and we've got a lot of information on our website about the valuation, but a third-party valuation would be used to determine the value of the company stock as of the end of the plan year. And we facilitate that valuation as part of our services and just as part of our annual fee for our 401k business financing clients. So I've mentioned that a couple of times about how the information that's reported on the 5500 is as of the end of the plan year. So let's talk about that, because that'll impact, of course, not only what's the information that's reported, but also when that 5500 is due. So there's essentially two categories that your plan, one of which your plan is going to be in. So you might have a December 31st plan year end date. So if you started your 401k in the first half of the year, you're going to be on a calendar year cycle. So that means that your Form 5500 is going to be due 7 months after the end of your plan year. So that's going to be July 31st or October 15th if a timely extension is filed. If your 401k was established in the second half of the year, you'll be on a June 30th plan year cycle, which means that your Form 5500 is going to be due 7 months later. So that's going to be January 31st or April 15th if a timely extension is filed. Now, I note that your business tax year or your fiscal year for your C corporation could be different, and that's fine. There's no issue from a 401k perspective, because keep in mind that filing the 5500 is not dependent on filing your business C corporation tax return, like your Form 1120. Now let's talk about late filing and penalties. So under the Secure Act, the penalties for late filing increased significantly. In fact, they increased tenfold to $250 a day to as much as $150,000 per plan year. And on top of that, and those are the IRS penalties. On top of that, the Department of Labor may assess their own penalties. Keep in mind, though, that there is the possibility to file under the Department of Labor's correction program, their voluntary correction program. The cost to file under that correction program is $750 for each late Form 5500. So for example, if you are on a calendar plan year cycle, the 5500 is going to be due by, if you file an extension, by October 15th of the following year. So if that 5500 is filed sometime after that, you're going to end up having to pay $750 to the Department of Labor to file under the correction program. And the benefit of doing that is that's going to cap your penalties. So you don't have to worry about the potential for these high penalties that could apply, especially based on the increase coming out of the Secure Act. So again, don't hesitate to ask questions, and I'll be happy to answer those questions. I appreciate everyone's participation and watching our webinar today. So let's touch on another common topic that can come up in the context of someone that's closing or selling their business. So of course, again, we're talking about here about entities that have funded their business via the ROBS 401k. So of course, sometimes you get to the point where the business is sold or maybe just wound down. It's important to recognize that that Form 5500 filing requirement is still going to apply. So after the company is sold or liquidated its assets, paid back creditors, and then distributed the proceeds to the stockholders, which is going to include the 401k, then the 401k can roll out all of the funds so that there's no more funds. For example, roll over the funds to an IRA, which of course would have required that a 1099-R be issued to report that rollover. So once the assets have all been rolled out of the 401k can be formally wound down. And part of that formal wind down process is going to be filing the final Form 5500 to formally close it out and essentially let the regulators know that the plan has been shut down. So of course there's special procedure which we would handle to file that Form 5500 as part of our services. And then of course issue the 1099-R to report the transfer of the assets to an IRA. And we have videos on, I would mention again, like the valuation, as well as more information on exiting a ROBS 401k to get more information on just the overall closing or selling process. So that takes us to the end of today's webinar. Please, again, we do have more time. If you have questions, please subscribe this video. We really appreciate everyone taking the time to watch. And I don't see any more questions. Or any questions, I should say. Thank you again for your participation and take care.